You're watching Chairman's Briefing, and I'm Rachel Lee. This episode is brought to you by Mogotes Metals. Let's get started. Gold prices demonstrated remarkable stability this week as a turbulent U.S. technology sector rattled markets. The precious metal maintained its position above $2,700, while tech giant NVIDIA saw more than $500 billion erased from its market value. The catalyst came from China's announcement of breakthrough AI technology. Like I mentioned, this development rattled U.S. technology stocks across the board. Market strategist Michelle Schneider sees substantial upside potential for gold prices. She points to gold's strong technical performance against the S&P 500 index, and her analysis suggests $3,000 per ounce remains a realistic target. The uranium market felt unexpected pressure this week. Industry leader Cameco Corporation saw its share price decline sharply this past Monday. The sell-off came as investors processed news about the more energy-efficient computing systems out of China. The uranium spot price followed suit, yet market fundamentals remain intact. BMO Capital Markets maintains a strong outlook for uranium demand. Their analysis emphasizes China's expanding nuclear reactor program. The country continues to build new facilities at an unprecedented pace, and the construction boom underpins significant uranium demand through 2030. Industry analysts point to current price levels as potentially attractive entry points. The market witnessed similar short-term disruptions throughout 2023. Each previous pullback created opportunities for strategic investors. Nuclear power development programs worldwide continue to drive long-term demand forecasts. A high-stakes game of economic chess is unfolding across the Canadian border. Yet, mining executives view these tensions as negotiating theater rather than impending reality. Canada supplies more than $80 billion in minerals to American industries on a yearly basis, so the stakes are pretty high. Industry legend Pierre Lassonde dismisses these immediate concerns, saying, quote, "All mine output is raw material for the U.S. industrial complex. The higher costs associated with any tariffs automatically go to the consumers, as all commodities are traded worldwide for the same price. As well, if the USA wants our critical metals, why would they put a tariff to get them? My sense is that Trump will mostly refrain from tariffs on all raw materials, including carbon products like oil and gas." Mining Association leader Pierre Gratton echoes this view. He highlights Canada's strategic position in supplying critical minerals like germanium and nickel. Political responses have been varying across Canada. Ontario Premier Doug Ford demands strong retaliation, while Alberta and Saskatchewan have been expressing caution, wanting to protect their resource revenues. Next, we have some market-moving news flow from the juniors. Atex Resources grabbed our attention a few months back when Agnico Eagle set its sights on the Valeriano copper-gold project and nabbed a 13% stake, a transaction valued at $55 million. Valeriano is located on the copper-rich mountains between Chile's legendary mining belts. Atex's latest intercepts revealed some of the highest-grade copper values ever encountered at the property. The discovery sits in prestigious company. This emerging district hosts projects backed by global titans like BHP, Lundin Mining, Atex Resources, Newmont, NGX, and Antofagasta. The latest drill hole by Atex struck an extraordinary zone measuring 152 meters. This section averaged over 2% copper equivalent grade. Now, this exceptional zone sits within a broader interval of 342 meters, containing nearly 1.5% copper equivalent. The market responded with enthusiasm, of course. Atex shares reached new 5-year highs as investors recognized the potential scale of this discovery. Next, Mogotes Metals has secured strategic ground in Chile's Vicuña district. The company added 1,300 hectares adjacent to BHP's recent $4.5 billion acquisition, Filo del Sol. Now, this expansion brings Mogotes' total district position to 10,000 hectares. Nearby drilling demonstrates the area's potential. Results just over a kilometer from the new claims revealed 600 meters of consistent copper-gold mineralization. A dramatic turnaround is unfolding in Brazil's resource-rich Amazon region. Belo Sun Mining received pivotal legal news that could revive its dormant Volta Grande gold project. The Federal Court of Appeals in Brazil delivered a unanimous decision, and the ruling places the project's fate back into the hands of state environmental authorities. The story centers on a massive gold deposit nestled along Brazil's Xingu River. Volta Grande holds nearly 5 million ounces of gold in measured plus indicated resources. An additional million ounces sits in the inferred category. These numbers do paint the picture of a world-class deposit that's looking for a path to production. Last year, the project faced significant headwinds. Brazilian federal prosecutors attempted to derail agreements between the company and the National Land Rights Agency. This latest court ruling shifts the dynamic and empowers the state of Pará's environmental agency to guide the project's future. Interim CEO Aisha Hira emphasizes the company's commitment to stakeholder engagement and points to the established relationships with state authorities. The latest development was endorsed by the market, with Belo Sun shares reaching levels not seen in several years. Goliath Resources stands at the edge of what might become their defining moment. Recent results from their gold digger property already propelled the company's shares to multi-year highs. The standout intersection revealed 34 grams per ton gold equivalent over 39 meters. This included an exceptional zone measuring 10 meters at 132 grams per ton gold equivalent. Yet, this breakthrough might represent just the opening chapter. The company deployed 9 drilling rigs across the property in 2024, and they completed over 38,000 meters of drilling, and the most compelling part of the story remains untold. 85% of the drill results still await release from the lab. Early indicators paint an extraordinary picture here. Every single hole, which is 243 in total, struck their intended target. More remarkably, 92% of this year's holes encountered visible gold. Many displayed abundant coarse gold visible to the naked eye. The market is anticipating each new set of results with growing intensity. This systematic exploration program continues to expand the footprint of what geologists may describe as a world-class discovery. Discovery Silver steps into the heart of Timmins gold country. The company struck a $425 million deal with Newmont to acquire the legendary Porcupine operations. This transaction writes a new chapter in a district that produced 70 million ounces of gold. Discovery Silver transforms overnight from explorer to substantial producer. The Porcupine complex promises to deliver 285,000 ounces of gold annually over the next decade. The mine plan extends beyond 20 years. The story extends far beyond current production. 11 million ounces sit in inferred resources at the historic Dome mine alone. Discovery's leadership brings deep roots in Timmins. Their century of combined local experience positions them to unlock fresh value from these established assets. And that's your briefing for this week. Leave us a comment. We read every single one. And if you enjoy this kind of content, make sure to share it with your network. I'm Rachel Lee, and we'll see you again next week.